Good morning, ladies and gentlemen, and welcome to this live trading webinar. It's a privilege and honor to host this webinar for you today. For those who join us for first time, my name is Theo, and I'm doing the regular sessions. I hope everyone is having a great day so far, wherever you are in the world, from wherever you are watching us. And let's get started. Guys, just to make sure everyone understands that this content is for general information and it's not intended to provide any personal advice, any personal recommendation. So please understand this. Someone says they cannot hear me very well. What about the rest, guys? Those who participate via Zoom, can you hear me? Do you have a clear picture? Do you have a oh good? Oh good, yes, okay, right. So please, no problem here. If someone has an issue, please check your connection, your site, because most of the people they can hear me well. So let's have a look. What are the news for today? Bear with me to bring up the screen. There it is. So in the US, durable good orders and GDP growth rate for the quarter. The durable good orders, they show a forecast to be a better number compared to the previous number. So if this is going to be confirmed and the markets will follow through, we can see some strength in the dollar. For the GDP growth rate, we expected some slowdown, but that's for the quarter. So we will see how the markets, they will react actually when the outcome and what it's going to be the weight, I believe the weight average from here. What can we do? We can just refer to our chart, and as we said so many times, price discount everything, price action discount everything. And as we know that the dollar index, it's currently on support, we will see it on the chart in a while. Then we can anticipate some push to the upside or some breakthrough. That's all. And for those who are new here, guys, on a single day, we go through today's headlines through the premium analytic portal here at Admirals in order to just get an idea of what's going on in the world. US warns banks to watch for Russian oligarch investing in commercial real estate. SEC floats ban on Wall Street activities linked to 2008 financial crisis. UK gambling company fined 7.6 million over money laundering control issues. Germany sees its economy growing this year despite the Ukraine war. And it says here that Europeans' larger economy is likely to expand by 0.2% this year. Forecast 0.4% contraction. US, Germany approves sending tanks to Ukraine. IBM to cut almost 4,000 jobs, aim broader tech slowdown. Meta pays BuzzFeed millions to generate creator content for Facebook and Instagram. why Tesla is still gunning for growth. And the last one, Elon Musk explores raising up to $3 billion to help pay off Twitter debt. So for those who are buying and hold stocks, for the investors here, you had a good clue that maybe some companies are on discount now, so we can take advantage of that. Let's see, or fine. Guys, please make sure you use this time and ask any questions you want about trading. Please put your currency pairs that you would like to have extend analysis on the chat boxes below so I can read them. Let's start with the pound against the dollar. Although we said that this market is facing this double top here with MACD divergence. What is divergence? The price makes this equal high, and the AMCD, it makes this lower high. It's a divergence between the price, as you can see here, and the MACD if you plot it on your charts. I don't think so RSI will show this divergence because it's been a couple of weeks, and RSI it measures 14 days, MACD measures 26 days. So it's going to be more obvious on the MACD. But despite that, we mentioned the US dollar is very, very bearish. Yes, it is currently around support, but on a pattern that we can see maybe continuation. So it is very risky to try and catch a trade from here. However, if you guys want to do it based on our strategy of ranging market, you can do it. But because I had so many questions from traders, so why do we have a strategy on a ranging market and we take trades from resistance like this to the downside? And why, Theo, today you are saying that you don't want to take this trade here? I will answer. It's a very, very important question, guys. And the reason is, when we want to define a ranging market, we need to have 4 touches. How can I draw a line if I don't have at least 2 touches on the line? So there is no line to be drawn. Here I have 2 touches, but here I have only, that's the last swing, I have only 1 touch. So if the market comes here and reject it, then I have a valid range, and I can take trades to the upside and I can short from the resistance. But this one here, it's not a ranging market, and our strategy for taking this type of trades with MACD divergence, it's based on a ranging market. But this one here, it's not a ranging market because there are so many patterns can be developed here. The price can push all the way down here. It comes back. It creates this ascending triangle continuation pattern because we are in this uptrend, and then boom, explode it higher. So this is a counter trend trade, and to take counter trend trades, we need to see aspects like some reversal signals. Do we have a broken trend line maybe, or do we have a close below some moving averages? If you don't use trend lines and you use moving averages, it's pretty much the same theory behind. But if not, then this market, it just doesn't give us any character that we do understand, so we can take advantage of that. Is that clear, guys? Do you all understand it? Because there are so many people, they tend to take these trades, and then after some losing trades, they are wondering why it was double top and it lost. No, this is not a double top. A double top, a confirmed double top, it's after the break of the neckline of the double top. Here is your neckline. If you're gonna see this price move towards the downside, penetrating the neckline, then it is a double top confirmation, and we wait for the pullback and we take the trade. But understand, there are also impatient traders. So what can you do? If you tend to take these low probability trades, regardless, it doesn't mean that they're not going to win or they don't have potential to win. But you have to acknowledge that this is a lower probability trading. And if you tend to take these trades, you might be thinking to reduce your lot size. And if you are trading 1% on a trending markets, you can do this with 0.5% or 0.7 or 0.6 or whatever it's the amount you feel comfortable, because you have to understand low probability trades, there are for a reason, and we have to behave accordingly to protect our capital, first of all, and not to also harm our emotional stability when we are trading. So let's move on. Euro US dollar. The euro is much stronger, and although it came to retest this resistance, but it's been 2 days, the market is just pushing higher and higher and higher. Now, what can we see from this chart? Of course, if we're gonna continue pushing upwards, there is a high probability that the market it's gonna retest this area here, and it doesn't mean it has to do it in a straight one price action, one daily price action, or 4-hour candle bullish. Maybe it's going to go like this, and then it's going to retest. Maybe it's going to go like this, and then it's going to retest. Who knows? Okay. Only thing we can know for sure is that we see bullishness. We don't have any sign of confirmation for a reversal. Market is doing the behavior of higher highs and higher lows, and in these market conditions we look to buy and only buy. USD CHF, of course, it's a bit messy. CHF showed some weakness in general lately, so gave some advantage to the US dollar as well. We see that the market, it's still comparing to the euro against the US dollar. The euro is stronger. This, if the CHF was stronger as well, we should see the market creating a new low, and it's something we don't see now. So it looks like some weakness in this pair. Australian dollar, it's one of the best performing currency pairs, as we can see from the technical side. And we said yesterday, if we're going to break and close above this area, definitely we're going to look for some, I believe, intraday tradings to target this level here. As for today, we are approaching at this resistance. We have to understand that some retracement might come. We see this trend line or moving averages here. Everything points upwards, but the market needs to retrace to give us some entries, and then we are good to go. Or if you are trading on the 5-minute charts, 15-minute charts with your pivot points, that's also something we maybe look to buy as well. New Zealand, it's not that attractive, to be honest, because we are sitting on this resistance. It's been a while. We want to break above. If we break above this resistance, then we have a fairly room to move until we're going to retest this area here. So we can wait and see the market closes higher, and then we take trades to the upside. USD against the Canadian dollar. So we are still in this consolidation. I do expect, though, a push to the downside. Let's see if this is going to happen. But for now, the market is just moving sideways. And something many traders, they get confused on. When the market moves sideways, they try to catch this price action and validate their signals. Guys, when something is trendless, the price action doesn't mean anything, because the first we see where the money flows, where is the volume in the market. And if there is no volume, any price action here can create confusion. All right. Of course, and I repeat, and I will repeat it again and again and again, because we are dealing with probabilistic outcomes. Anything can happen. Even someone, if takes this bullish engulfing, buys there, have a stop loss below here, and maybe something happened, and the big traders, they decided that they want to push the price all the way here based on their interpretations at that point. It doesn't mean that it's wrong. We said it many times. There is no right, there is no wrong in the markets. A low probability trade can win, a high probability trade can win, a low probability trade can lose, a high probability trade can lose. But when we understand that there are no recognized patterns to trade in the market, if we have the temptation to take trades, we must look after our risk, how much we're going to place on that trade. All right. USD against the Japanese yen. We are still in a bearish bias. Now, if we're going to see continuation, we still see lower highs and lower lows. For me, I mentioned a few times that based on order block strategy, order block setups, let's say, I see this area as more attractive for the price to come before it's going to start sell off. But then there is another issue with this area. If we're going to come all the way up here, the market might be, it's going to put a new trend, because we will break this trend line resistance. So I'm a bit skeptical about this. If I will do something, I prefer to do it only on the intraday basis for short-term activity, and not to buy and hold for long-term. For example, now on 15-minute chart, let's say the market made a double bottom and it created this high here. So I don't want to sell when the market it has this higher high. I want to sell when the market has lower highs and lower lows, like this one here. That was a sell, that was a sell, that was a sell. That was a sell here, but then it lost, so it's okay. Always a trend following trader, always the last leg before the reversal. Of course, it's going to be a losing trade. We don't know that, but if you got 1, 2, 3 winners and 1 lose, if you have 2 to 1 or 3 to 1, then it's you are in a very favorable reward to risk trade. So we will wait and see what's going to happen. Again, remember, it doesn't mean because on the daily chart there is no too much room to move to make, let's say, 2 to 1 or 3 to 1. We cannot trade. Of course, we can trade. We go to the lower time frames. We apply our strategies, and we let the trades play. And about the Australian dollar, Japanese yen, we had this double bottom here, and the market came and reaches this resistance trend line. It didn't create a new low. It put, though, this rejection with a pin bar, and it just created a new high. So based on this market activity, on the lower time frames, if we want to trade it, yes, we can look for longs up to this area here where I mark, because here it's another area of resistance, as we can see from the left. It was the origin of the move, and always the origin of the move, it's where most likely many selling orders are sitting. And you can see it from here, why we had this rejection here, because obviously at this area where the move started and we had the new trend leg, there were still many sell limit orders. That's why the market just sold off. And let's have a look. Which one? Guys, any other pair you would like to see? Or I will go to the indices. Jonah, please remember to explain pivot points. Pound New Zealand. Yes, I will answer live. Euro New Zealand, Pound New Zealand. So remember Pound Australian dollar. Yes, remember, guys, New Zealand, it's at resistance there on the New Zealand against the US dollar. It's sitting at resistance. Okay. The euro against the US dollar, it's creating this higher high. They are both, in terms of strength and weakness, they are both performing really well. They perform with strength. All right. However, we wait for the New Zealand to break above the resistance. So let's have a look. If we put them together, Euro New Zealand, what outcome we will produce? First, we are in a sideways move. What do you guys see? Which time frame are you analyzing in this currency pair? Are you analyzing the monthly, or we have this bullishness here, or the weekly? We have this bearish, but the market is clearly in this 1, 2, 3, 4, 5 weeks in a trading range. So we can trade, let's say, for a range, we can trade from the support to resistance and vice versa. Here we had here we have this support, this resistance. The market is clearly in this trading range. Now we are in the middle. If you guys believe that this can push to the upside, for me, it's a trading range. Both of them, they show some strength. Euro, it's much stronger than the New Zealand, we can say. But you can have a look at the lower time frames. If you believe that it's going to go to all the way to the top, then you can maybe trade this. For me, it's consolidating. It's a very trendless market. It doesn't have any significant from the one side against the other. So I wouldn't put much effort on that. This one here, the pound against the New Zealand now, we came all the way to the support, and yesterday a bullish candle arises. The bias in this, if you look at the weekly chart, guys, it's in a range all the time. Here it's a strong support, for example. Now, there is nothing to indicate that if we take a trade here, we can see a good move. So unless this will be the beginning of a new downtrend, and we don't know it. We don't know it, okay? Because what can we believe that maybe it's going to be the beginning of a downtrend, but who knows? All right, unless we see a downtrend, then there is no downtrend. So that's from this currency pair. Pound against the Australian dollar. We broke below this support. For me, I would like to start looking for some shorts. Based on technical analysis, we have the 2-day rule. Excuse me. 2-day rule means we need to see 2 closes below the support in order to say that we have a valid broken support. So we have 1 close so far. Today, if we're going to close below, then it's a valid close, and we're going to definitely look for longs. We're going to definitely look for short plays. If we go on the lower time frames, based on this pattern today, I will look for shorts, but it's not something I will touch, to be honest, because there are more clear. The Japanese yen, for example, JPY, it's weaker, as we observe from the chart. It's a bit weaker than the Australian dollar, than the pound, so maybe than the euro. So maybe we can focus to buy the Aussie yen, to buy the euro yen. All right, that's what I believe. Guys, we have another 3 minutes left. Can you explain? Sorry, guys, I just saw them. You put the questions on the Q&A box instead of the chat box, and they didn't come up. Jonathan, can you please kindly, and Anonymous, can you guys kindly put your questions on the chat box next time, not on the Q&A, because they don't come up, and I have on a different screen the Zoom and the Facebook Live and the Instagram, the YouTube Live. So please make sure you use the chat box. Please remember to explain pivot points in 3 minutes. Unfortunately, we don't have the time, but tomorrow I will definitely explain the pivot points. Let's see the last one for today. The end gas, it's still on a downtrend. It's just selling lower and lower and lower. We have our target here for those, maybe they took some trades. For example, this one here, maybe it was a good trade, or this one here, but now the market is still on the free fall. My profit target is this down there, and that's the $2.3. All right, guys, as I explained earlier, I have to end this webinar by 10 o'clock because there is another webinar start exactly at 10 in a region. So unfortunately, I cannot delay. I used to take this webinar 5-10 minutes more, but I believe from February it will be okay. So I will get a 5-10 minutes to try and go through some intraday trading based on pivot points. Please be patient, be consistent, join the webinars, and don't worry about the pivot points. We're going to explain them, we're going to analyze them, and we will trade them, okay? Please remember that tonight I will interview one of the most famous traders, and that's Anna Cooling. I will send you the link. If you haven't registered yet, please make sure you do so. And I will see you tonight at 4 p.m. London time, UK time. Please make sure you be there because she's going to talk about volume analysis. She's an exceptional trader, ladies and gentlemen, and it's something you really don't want to miss. It's going to be just for 1 hour and one time only. Thank you so much, and have a great day.